The stock market is set for an explosive move because ever since we formed our low late last year, there's only been one red week. And now we're seeing another. So the question is this going to be different? Meaning, are we going to get a corrective wave or are we just going to rally up like every other time this year? I think a lot of that will depend on Wednesday when we hear from NVIDIA's earnings. But there's a bigger problem, like the title of the video suggests. There's a record $6 trillion in cash sitting on the sidelines, which is supposed to help stocks this year. But as of February, this is from December, there has been no update. That $6 trillion is still sitting on the sidelines. And greed is really high. But if we look at the chart, we've been talking about this pattern as well, about how if we continue to see strength, we're probably going to see more continued strength, more higher lows, more higher highs. So the really big difference between these 2 weeks here is that this red week had a weekly lower low. This one here does not. So this time does look different. And honestly, it is really surprising that the market is this resilient. So we want to understand exactly the reasons why. Well, if we look to history, normally February is a really bad month, but this continued strength has trumped that. The market does not care. It just wants to go higher. And this is at a time when we see that investors are all in on US stocks, the highest level since August of 2020. And the top 5 stocks account for 75% of the S&P 500's returns so far this year. The top 3 stocks, that's 90% of tech stocks gains so far this year. US equity breadth is currently the worst since 2009. Okay. And now we're seeing some deterioration out of these big names: Apple, Microsoft, Google. NVIDIA is still strong. Like I mentioned, they report earnings a little bit later this week. We'll find out what happens with this AI boom. And specifically that Loop is now upgraded NVIDIA to 1200, and they think we're going to party like it's 1995. So we're going to come back and talk about NVIDIA a little bit later in the show. But here we're going to focus on the macro first. So the next thing is that the relentless S&P 500 momentum leaves dip buyers with little or no playbook. 14 out of the last 15 weeks have been up weeks. That's the best run since 1972. So if you're like, wow, this time feels like there's a lot of greed in here, well, yeah, it's the best win streak since 1972. That's 50 years ago. That's a really long time. So if now we think about dip buyers, well, these short sellers going back to June of 2022, man, they are desperate for a dip and they're just not getting it because they're still really big short here. They're not taking any chips off the table, and this is probably getting very painful. Extreme greed is also really high, which means that momentum is strong and we're probably going to keep going higher. This is also at a time when we note that the S&P would have to climb another 25% to reach dot-com era irrational exuberance. So does this mean that this time's different? Well, just on the 15th, we're seeing that the bubble may be far from bursting. Capital Economics says the S&P could rally to 6,500 by the end of the year. That is a huge, huge, huge number. And as we look to this next slide here, what does it tell us? Well, ironically, this is the post that I shared at the beginning of the year where I said that my target is 6,200 and 5,600. I thought 62 was a bit of a stretch, so I went with 5,600. But note here that they're talking about this going through to basically 2025. It's not in the headline, but it's in the article. I did the reading, so you don't have to. What this basically means is that looking to my 2024 template, we don't want to fight the Fed. A pause is bullish. We got blue skies, which are bullish. Chips lead tech and tech lead SPY. So with NVIDIA reporting earnings this week and with Fed meeting minutes coming out on Wednesday as well, that's what's going to be really important. I have some assumptions here too. A monthly lower low closing below the low. So that's the chart we just looked at here. So if we're going to print a weekly lower low this month, we have to make it down to 4, 6, 7 on SPY. But remember, we've not been even able to form a weekly lower low. It's happened one time since our low at the bottom. So how are we going to form a monthly lower low if we can't even break this weekly chart? Well, I have no idea. We have to come all the way down to 4, 6, 7 in basically the next 2 weeks in order for that to fulfill. So this is not looking very likely. So what do? We keep listening to Warren Buffett. This has been difficult. Patience is hard. That's why there's only one Warren Buffett. I've updated the graphic as well to be higher quality. Thank you for your comments. So we want to be patient. Otherwise, the market's going to transfer the money from us to people who are more patient. This is hard. Patience is a virtue, but man, this is hard. Like I mentioned, that's the reason why there's only one Warren Buffett. History is also on the side for the bulls. Why? Well, after we have a bear market, usually 1 year out, there's a 90% chance we're going to be higher. And on average, it's a 16% return. Oh, that gets us to my target of that 5,600. Okay. And then again, after we crack the 5,000, what do we get? Well, it's a little bit shaky, the 1 month out, 60% chance. But after 3, 6, and 12 months, the odds are very good that we're going to be higher. So I know it might be hard to believe, but the market wants to keep going up. So when we hear from the Fed on Wednesday, I think this is going to be very important in terms of economic data. It's a very light week for economic data, but this is going to really tell us what happened at that last meeting. It's also really interesting because I don't personally want to hear about a pivot. We've talked about this before, but most declines actually happen after the Fed pivot. So as of right now, we're in that Goldilocks scenario where no pivots are good. I don't want to see pivots. But as I mentioned, when those Fed meeting minutes come out on Wednesday, they're talking about inflation. And right now, CPI came in hot. So what came in hot? Shelter. Food came in a little bit higher. Gasoline, used cars are down. So what exactly is happening? And does the Fed even know what they're doing? Look here. One of the most recent additions to the Fed, Fed's Goolsbee, says housing inflation is a puzzle. Well, I don't really think it's that much of a puzzle. And that's not really what I want to hear from Fed officials because I think it's really simple. This is what I think the problem is. It's the same problem up north here in Canada. What is it? It's a housing deficit. There's not enough homes. There's currently a 3.2 million house deficit as of 2022, which means that people are just, there's more inflation. That's why shelter is going higher because there's just not enough supply, right? Supply and demand. That's what we learn about. And then secondly, the part that I think is maybe hard for people to understand is that the US is only recovering. Again, we can look here to the years. The overlay is Canada, which has been one of the hottest housing markets probably in the world. And we can note that from roughly 2007, 2008, the US is only recovering what they've lost. Canada, in the meantime, has doubled. So the US could definitely catch up and then actually go even higher, which would what? It would cause more inflation for shelter. Oh, so like the higher for longer is starting to resurface. I think it is. And we're going to find out on those meeting minutes. Here's the key levels for the week. Encourage you to pause the video if you want to read them. And then finally, for your quick summary, here are the numbers that matter for this week. We've got the number one data point coming out on Wednesday at 4:20 p.m. That's going to be NVIDIA's earnings. We just talked about those. We'll talk more about those in a minute here. And then we have the FOMC meeting minutes coming out on Wednesday. And then we have Thursday with European CPI. So it's really all about Wednesday into overnight Thursday. All right, now let's talk about NVIDIA because, oh my goodness, if we're going to keep going higher, this is probably what we're going to need to see. B of A survey says investors are all in on U.S. tech stocks. Well, they better keep going higher, and fear and greed is right into that extreme greed right now. OpenAI, Sam Altman seeks $7 trillion in new AI chips. I don't know if this is a fantasy or what he's doing. $7 trillion is such a big number. What I would also note is that Loop is now giving them a $1,200 price target, more upside into 2025 estimates, which would give credence to that bull case we just talked about. 1,200 is a lot higher than we are right now. So they think it's 1995, where we're going to get productivity gains. We're going to continue to go higher. And I have to say that I watched a video a little bit earlier today, which really, really surprised me. I'll maybe leave the description for this one here. But what it basically is generative AI from Marcus Brownlee. And I'll just play a really quick clip here. There's no video, but what he talks about is basically that a year ago, we had this is AI for videos. It's Will Smith eating spaghetti. This looks terrible. It looks so fake. But now, as we look forward to the future, OpenAI is actually working on some very cool and very realistic videos. This is an AI generated video. This is an AI generated video. This seems pretty real. This is AI generated. This seems very real compared to that Will Smith video. And there's even other ones in this video, like watching, like we got puppies and we got these very realistic videos. So I think that if we're going to see an AI boom, well, this is AI generated too. This looks really real. I think it's going to come down to NVIDIA. So if it's 1995, we better start seeing those gains. So here we talked about how tech needs to keep performing because we don't have breadth. We have some breadth coming in, and we'll look at some charts a little bit later. But when they report on Wednesday, I think that we want to be very mindful of their forward guidance. Everything says they're going to be doing well. The question is whether or not there's enough priced in right now. When I look to whether it's 1999 again or a new era for the markets, they're basically saying, is it 1995 or is it 1999? Because 1995 to 1999 was excellent for the stock market. 1999 to 2000 was not so good. So when we look to mega caps, we talked about how we have to see an increase of, I think, 25%. Yeah, 25% to reach dot-com era irrational exuberance. And the big difference here is that these large caps, at least for Apple, today is cheaper than it was for its 10-year average on a forward PE perspective. NVIDIA, actually a little bit cheaper. Meta, actually a little bit cheaper. What does that mean? There is room for margin expansion. Apple, it's more expensive. Microsoft, more expensive. Google, not so expensive. So the two most expensive stocks in the market are a little bit rich, but there's room to grow on all these other ones. And remember, Stanley Druckenmiller has told us that we want to hold on to NVIDIA for a couple of years. That's an AI boom. And this is from June of 2023. And he's still long the stock, but he did sell 30% to trim it down to be at 10% weighting. He also sold some Eli Lilly to get it down to roughly 7.5. So what does that mean? It means that he thinks we're going to keep going higher, but he's taking some chips off the table. So if more people do what Stanley Druckenmiller's done, maybe that's going to cause some sell pressure, but this train seems like it's already left the station and does not want to stop. Supermicro computers and NVIDIA. This is really interesting too, because 68% of the revenue for Q2 of 2024 is going to come from NVIDIA. So Supermicro was kind of attached to NVIDIA. And this stock had a very sour reaction on Friday, down 20%. Is this going to bleed through to NVIDIA? We're going to have to find out. All right, so that's NVIDIA, and we're going to report on this all throughout the week. But I want to show you two more quick things here because AI chips don't need $1 trillion investments, NVIDIA CEO. So he thinks that there's going to be, assumes the computers won't get faster, right? That's called Moore's Law. So he's sort of like, hey, I'd love to take your $7 trillion, but I don't think we need that much. Interesting. And then NVIDIA also reports they have a stake in ARM, the other AI company for chips, which we've been seeing has had a meteoric rise since their IPO. Interesting. All right, so I'm a little bit over on time. So what I want to do is just leave you with two more quick charts. And I really encourage you to subscribe to the channel because on Tuesday morning, I'm going to go through and do a lot more of these. The equal weight. I'm actually going to go here to RSP on the monthly. This is equal weight S&P 500. So a lot of other charts are already in blue sky territory, but RSP is not quite there. I see a little bit of a shifting story because when we look here to the weekly, it closes up nicely green. We're going to go to hollow candles because that's what I prefer. So we've had a nice back-to-back weekly gains here, and we know that the market was red. So that rotation that we're seeing in small caps, the rotation that we're seeing out of these large cap mega companies like Apple, Microsoft, if we look back at the last 1 week, let's go back to 1 week. So these blocks are really red, but we're seeing strength in things like the Russell. The Russell 2000 is actually up by 1.1% on the week. Energy is up on the week. Oh, healthcare, I didn't check, but yeah, it's up on the week. So what is this? That's called breadth that's expanding. And as we noted, it's the worst since 2009. 2009 was actually a really great year. It was right near the bottom for stocks. So here's what I want you to pay attention to. I'm seeing some conflicting data. When I look here to RSP, we are nicely over the 50 DMA, and we're trying to make a run for those new all-time highs. And here's the part that I'm missing. As I look down to here, there's these two other indicators that I think that are really important. There are these ones right here. S5FI tells us how many S&P 500 stocks are above their 50 DMA. Well, there's less and less stocks. So what this tells me is that even though the equal weight S&P 500 is advancing, less and less stocks are maintaining their 50-day moving average. We've rejected off the 50 and we're crashing towards the 200. This conflicts with the RSP chart. And then additionally here, when we look to the 200 DMA for S&P 500 stocks, well, it's battling for the 50 DMA right now. So I want to see which one's going to win. RSP is bouncing, and going higher, where those other charts are having some weakness. So like I mentioned, there's a lot on the line. If you want to watch my 2024 preview for the year, that's now queued up here on the left-hand side. If not, subscribe to the channel, and I'm going to walk you through all these other charts on Tuesday morning. Thank you very much for tuning in. I'll see you on the next one.